Okay guys, in this video, I'm about to show you how to finally read the NASDAQ like a professional. And I promise I'm explaining it in a way that even my 9-year-old daughter can understand. So if the candles confuse you, if the market looks like a bunch of noise, or if it just feels like you're maybe entering late, this video is going to change all of that today. So most beginners, they're watching the chart candle by candle. They're watching every movement of every candle. And that's why it feels random. But the NASDAQ is not random. It's literally reacting to three things. That's where money is sitting, liquidity, where the market wants to move next, and time. So once you see that, everything becomes simple. So let me show you something simple. Actually, let's do 4 hour. Okay, so here we are on our 4-hour time frame, and price, let's start here. High, low, higher high, higher low, which is higher than this one, so it's a higher low, higher high. So the market's going to move like that in an uptrend, or it's going to do the opposite, where here we have a low, we have a high. Then what do we have? A lower low, and then lower highs. Another lower low, another lower high, another lower low, another lower high, another lower low. And what did we do here this week? We broke these highs. So once you see the wave, you can know where in the story you are. So these candles is the entire story. So we went from an uptrend to a downtrend, and this could be a sign that the market wants to switch again. So when Lindsay trades, she uses this one rule. Is the market breaking highs and going higher, or is the market breaking lows and going lower? If the market is breaking highs and going higher, we're looking for buys. If the market is breaking lows and going lower, we're looking for sells. That's it. So when the market breaks a previous high, that's telling you that the market likely wants to consider going higher. When we have our high, low, well, we have a high, we break this high, we wait for the market to pull back. Once it's above this high, we can go. And I will link the video for the high-low go strategy for you guys if you're not familiar with it. But this is basically what we're looking for when we're wanting to go with the trend on the higher time frames. And when the market breaks these highs and continues higher, that's telling us that the market is buying. Now, when the market fails to break a high, See here, the market failed to break this high. Or let's say the market breaks a low instead. Like even, let's say you missed this somehow. And then the market breaks this low. Both of those are all signs of an early reversal. Well, it's an early reversal sign, put it like that. So this is basically why you don't need indicators, because the structure will tell you everything. So the entries, though, that's where most people mess up. So here's the simple approach for your entries. You want to identify your trend on the higher time frame. 4 hour, 1 hour. I like the 1 hour. If it's not as clear, I'll use the 4 hour. Like here, look. Even clearer. You see the structure moving up and breaking these highs. So you identify the trend on the higher time frame. Then remember, we don't chase. We wait for the market to pull back and rest. So that's your step 2. Wait for the market to pull back. Then step 3, we're going to enter when the pullback respects your higher time frame structure. Meaning, if we are looking at the market and it is trending up, okay? Let's say we identify the trend as an uptrend. Let's use this one as an example. We see the market break this high. We're no longer making lower lows. Now we've had a higher low form, okay? So this high, the market breaks it. We wait for the market to pull back. And then going into our lower time frame, remember, we're staying above this last high. It's the only way we can enter. Okay? We're waiting for this on the lower time frame to respect structure, telling you that the market is ready to continue up. And here on the higher time frame, it's pretty clear with these wicks. These wicks stab down into here. This fair value gap. No bodies anywhere to be found in any of these. Bodies close all the way up here. So that's confirmation that the market wants to continue up. So that's step number 4, where you confirm with momentum that the market wants to continue in that direction. So if the market is trending and it pulls back like this, don't panic. This is the market coming to get you. That's how I look at it. I look at it as the market coming to get me to ride the next leg up. It's just refilling liquidity. That's it. So don't let things like this scare you when you're trading. So this is what we have with the market. This is after Thanksgiving. So we're coming off of a holiday. So volatility will increase on Monday and Tuesday. So don't chase trades, guys. Let the structure form and wait for confirmations. Okay, the market is looking good. However, those entries are very important so that you don't get shaken out the market. We're not chasing. We're waiting for the market to come get us. And then we ride that structure with our profits. So if this made the market finally make sense for you, drop a comment and let me know what clicked. And if you want the full step-by-step strategy, exactly how I trade the NASDAQ, it's inside my Precision Vault. Link is in the description. So, going into next week, I'm ready to trade. It's been a long weekend because the market's been closed for a holiday, or closing early, and not a lot of movement going on. As you can see on the 1 minute, this is what we've been doing for the most part. Well, it did kind of do that earlier, but all of this was Thanksgiving. The market is just moving sideways. So we wait for, see what the market gives us Sunday, and then our volatility on Monday. Hope you guys enjoyed the video.